I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews we have Daniel Tahori, founder of Tokenized.Tech, here to talk about tokenization, building a token in startups, launching it, managing it, and all of those details and more. Daniel, welcome to the show, and thanks for taking the time.
Thank you. You did great on my last name, by the way. Not many people do, especially in America. Nice. Good stuff.
Yeah, well, you got to get it right, and with tokenization, there's a lot of things that can go wrong as well. So you do have to do your best to get those things right. And I know that you have
Yeah.
been working on that for quite a few years, and Tokenized.Tech is helping companies tokenize as they launch to try and set them up for success to create a great blockchain company that actually makes a difference and the token sticks around and has a meaningful impact. I would love to start off our conversation with just a little bit on what Tokenized.Tech is, what's the goal, and then we can dive into like tokenizing a company and how to make that successful.
Cool. Yeah, okay. Okay. So tokenize our whole process, what we're trying to achieve right now is the build of better, more sound digital assets, basically. So, you can think of it almost like an antithesis to companies or platforms like Pump Fun or Bonk Fun, rather than just simply launching a meme coin through an application layer. You're more so trying to launch a digital asset that functions much more similarly in the eyes of a potential investor, like a stock. So that's really what we're trying to push forward is as much as it is obviously cryptocurrency and it's blockchain backed and it's smart contracts and all the rest of the rigmarole. These are just digital assets, and our biggest vision for Tokenize is if we can help to make the digital asset market efficient, then we can create an environment where it's more likely that large scale investors, external retail investors, anybody who's potentially invested in something like the S&P 500 would look at crypto as an asset class that's worth investing into as well.
Definitely. I love to see platforms that help launch legitimate, more digital assets that have an underlying value. And people
Mm,
can say what they will about pump fun, whether it's injecting money into the market or it's just fun. And there's nothing really backing those tokens. And I don't think that is the right platform for a company that's trying to tokenize, but they don't really know the intricacies of Web3. They might see, hey, people are
mm,
able to easily create tokens on this pump fund platform, but there's so much more to just creating a token and launching it. It's like when you're creating a company, the stock. There's different ways that you can go about it to have a better chance of success. And I know that there's many different pieces to it, but from reading your
mm.
work, I've seen that it might be easier to start by categorizing the planning and building of the token, then launching it and having a successful launch, and then managing it afterwards to ensure that it doesn't just launch and die like some of these celebrity tokens launch and then minus 99% and they forget
Yeah,
about it a week later. So there's three pillars
yeah.
to that. I would love to start off on the most important one probably is building and the tokenization process from the beginning, tokenomics, so many other factors. Can you talk about what goes into the thought process of tokenizing and the building part?
Yeah, of course. I think so for us, our primitive within the company is tokenomics, which is really just a fancy word for the economics of a token. And it's not as big and scary as it seems. I think there's a misconstrued thought process in the space that tokenomics are particularly challenging. I mean, it's not like they're easy, but it's also like it's I don't know, you don't see a lot of people wanting to explore that particular area. And
Mm-hmm.
so we go from the primitive of ensuring that what you're building is backed by sound simulations and sound economics
Mm-hmm.
to suggest that your token will do well.
Mm-hmm.
So, a good example of this is having a relatively normal supply, having a decently allocated token, having tool to make sure that people have the correct lockups. And then you can look at things like making sure that, I don't know, you go quite deep, but you can look at things like making sure that your sell pressure doesn't look too bad or your supply shocks are not too bad. And there's just a ton of there's math and there's science and there's economics that go into it. And I'm trying to make it seem like it's not the problem with tokenomics in the current space is that it feels like it's gatekept by a lot of people who think
Mm-hmm.
that they're smarter than everybody, and it makes it alien and challenging for people to want to jump into. But your tokenomics are what will set the foundation for a good,
Mm-hmm.
healthy asset. And so
Mm-hmm.
it shouldn't be, scary. It shouldn't feel like a walled garden. It should be just as normal as if you were to go to a smart contract developer
Mm-hmm.
and get your smart contracts done and then
Mm-hmm.
audited and so on and so forth.
Yeah, I feel like tokenomics are so interesting because all of the, for example, the top 100 coins that are the most successful and have been around for years and years, mostly all the tokenomics are different and they have
Mm,
different circulating supplies, total supplies, inflation rates, whether it's in deflationary or small inflation, and you go from 21 million with Bitcoin to like trillions with Dogecoin and these other ones, and
yeah.
it's like what are the factors that made those successful, being that they're all so different. And when a company comes in and they say, well, Bitcoin's successful, maybe we should make 21 million as well. But I feel like it's much more complex than just doing
Yeah.
that.
Well, it's down to the use case, really, right? So you
Mm-hmm.
actually two really great polarizing examples to sort of contrast to what they're doing. So with Bitcoin, you have an inherently deflationary supply because we have the halving event that occurs once every
Mm-hmm.
4 years, right? So the rewards are halved every 4 years. And we will only ever have 21 million Bitcoins. And what's happened with Bitcoin is obviously it started off with the idea to be peer-to-peer payments. What it's now being seen as, or it's found sort of product market fit to a store of digital value, which is actually the model supports stores of digital value better because the supply is being halved the rewards are being halved every 4 years, and because the supply is so finite. And to that end, what you end up with is you end up with Bitcoin sitting at $118,000.
Mm-hmm.
That to potentially the average investor might seem quite large, but to institutional finance, to people on
Mm-hmm.
Wall Street, they don't care about $118,000. So fine, no problem. You've got people like the Michael Saylors of the world who are storing tons of Bitcoin, and now it's being associated with their equity value, et cetera, et cetera, et cetera. So it becomes this really quite interesting digital gold,
Mm-hmm.
right? But then with Doge in particular, the key difference here is that Doge is about culture and it's about the tangible valuation of said culture. So meme actually it was coined back in the 70s by Richard Dawkins,
Mm-hmm.
and he was positing that so a unit of DNA is a gene, and so
Mm-hmm.
his in his mind he needed to of culture, and he defined that as meme, which is
Mm-hmm.
weird, right? Richard Dawkins, a very prolific scientist. So anyway, meme is a unit of culture, and so to assign value to memes is to assign units of value to culture. And Dogecoin's massive supply ensures that Dogecoin itself is almost always going to be quite low in value. It's going to
Mm-hmm.
be 30 cents, 40 cents, maybe maximum, right? And so to the retail investor, to the person who's
Mm-hmm.
just a fan of the culture, it's very accessible. It's very
Mm-hmm.
easy to become part of the hype and of the team, and
Mm-hmm.
act as a really cool entry point for people to get into assets. As much as it is obviously a meme coin, it's a cultural asset and a representation of culture.
Mm-hmm.
So really two polarizing differences, very different tokenomics,
Mm-hmm.
but specific to the use case and utility that these assets have in their respective ecosystems.
Yeah, no, it's great to see that polarization, but I feel like for companies that want to, make a legit tokenization of whether it's their stock or a utility token for a financial
Mm,
application, for example, you're going to want to meet in the middle between those two.
mm,
Maybe it's not digital
mm,
gold with scarcity, and maybe it's not an abundant meme token, something in the middle.
mm.
I don't know if Ethereum is a good example of that or some of the other large caps, but does that make sense?
Yeah, I mean, I think it's always just down to the use case.
Mm-hmm.
Whenever I work with founders or whenever I'm mentoring accelerators or whenever I'm, working with somebody, I'm always
Mm-hmm.
saying to them, like, what is your token actually going to do
Mm-hmm.
in your system?
Mm-hmm.
And if you just tell me, oh, you can stake it and you can generate some yield, it's not enough. That it's not
Mm-hmm.
2019 or 2020 anymore.
Mm-hmm.
And so utility is probably the most important lens to think through when designing a token. And that's often what I sort of work through with founders.
Mm-hmm.
So it's sort of like, you've got what's it going to do? Then you've got the base set of information about the token. So your supply, your market
Mm-hmm.
cap, your valuation, those sorts of
Mm-hmm.
things. And then you've got all the deep stuff underneath where, you go in deep and you sort of figure out, hopefully in theory, what's going to and how can we ensure that it does something really good?
I love that you're actually correlating the two. I feel like a lot of projects they just look at the tokenomics and they just throw a dart or something, and when understanding what the function is, how that actually relates to making successful tokenomics based on that, it makes sense.
Mm,
And so
mm.
I would love to dive into that more myself, like on the Tokenized platform. I'm going to check that out. I have
Cool.
a question for the 99% of the tokens that, because there's thousands of tokens that are
Mm,
semi-successful,
mhm.
but there's millions now with the ease of creation that are not successful.
Yeah,
Can you talk about some
yeah.
of the reasons that launches fail?
It's a really good question. I mean, it's a plethora. So I would say to like immediately off the jump, it's going to be you're going to have some sort of something foundationally wrong with the tokenomics. That's almost
Mm-mm.
often the case.
Mm-hmm.
But then it's also interesting because there is a gap between the tokenomics that you've built and actually actioning it when you go to market. So
Mm-hmm.
we all remember Hock Coin. What happened was her tokenomics were actually not terrible. They tried to build some semblance of structure. It wasn't too bad. But what actually happened was when they launched the Hock token, the devs never put her tokens into smart contracts, and they were never actually locked up or vested. Essentially, they just had control over the supply and
Mm-hmm.
then dumped it as soon as it got to a
Mm-hmm.
certain point. So, okay, so even if you maybe have the good tokenomics, you need to make sure that you have everything structured from a development perspective. It needs to sit in
Mm-hmm.
smart contracts, need to sit on chain, those sorts of things. Okay,
Mm-hmm.
maybe you've done both of those and you're doing well. After that point, you can have all sorts of things occur, like founder error. So another example we can look at is Ohm or Mantra. The guys running it were basically running a massive. I don't want to be too deflammatory here. What they were doing, because this is actually just talking about facts, is they were using
Mm-hmm.
over-the-counter add buy pressure into their
Mm-hmm.
token. But what they were doing as well is they were keeping liquidity thin. So when you have thin liquidity but buy pressure, what this does is that actually creates artificial
Mm-hmm.
price pumps, right?
Mm-hmm.
And so they pumped from like 50 cents to $6 over the course of 6 months because they were doing these deals. But then
Mm-hmm.
what happened was they met a ton of sell pressure all of a sudden. The liquidity was still thin. And so the same happened in reverse, right? Tons of sell pressure, no liquidity, dead token. This was founder problem. So they've done everything else right anyway to start off
Mm-hmm.
with. They've done the
Mm-hmm.
tokenomics, they got the smart contracts, they got the asset in market, but they still cooked it because they did something wrong that was
Mm-hmm.
fundamentally negative towards their token health. So
Yeah.
it's like it's interesting you ask the question, why do launches fail? And it's like it could be any reason if you're not just doing the correct steps in a row. Basically,
Mm-hmm.
you're climbing up the ladder, and at a certain point, you can just fall off the ladder, and that's sort of how some of these, well, most of these launches occur.
Mm-hmm. Yeah. Yeah. The mantra example is, I think you could consider it a successful launch, but not a successful
Right?
manage, which would be the third step.
No, that's
Uh,
you're right. You're absolutely right. Yeah.
but on the launch part, I want to dive into that more because I feel like when a token launches, some kind of management of it right away is super important because if it
Yeah.
dumps on day one, maybe there's a hard time recovering and there's all these other factors. Can you talk about your factors for a successful launch period?
Yes, that's great. Actually, that's a really good question. So, when you're going through a launch period, this is the TGE, what we refer to as TGE, so your token generation event, right? And then depending on the protocol, though, it could be like that could last a week potentially.
Hmm.
So, when I work with startups, basically it comes down to do you have money or not? So
Hmm.
let's look at both scenarios. If you have money, right? If you have some decent
Hmm.
money, you can almost always pay for a SEX listing, so a centralized
Hmm.
exchange. And if you can get onto a centralized exchange, so like MEXC,
Hmm.
like Gate, for example, that
Hmm.
usually really does quite well from a launch perspective because one, you get the cosign from the brand that this token is worth potentially buying. So you
Hmm.
get that sort of marketing, you get that bit of reputation. So that's a good first day booster. And then the other side of it is those platforms typically have KYC users who have
Hmm.
money sitting in wallets who
Hmm.
are ready to start buying those assets.
Hmm.
So if you have the cash to pay for a listing, going for a sex listing first, and then once you've made some money,
Mm-hmm.
you've got some liquidity going, maybe you go out and deploy something in a liquidity pool on like Uniswap or SushiSwap,
Mm-hmm.
and then in that case, you can keep your market running without necessarily needing to be confined to a centralized exchange because
Mm-hmm.
obviously you've got Web3, you've got decentralized,
Mm-hmm.
centralized, you've got
Mm-hmm.
purists and all that sort of thing. On the flip side, if you don't have money, which is lots of projects, what I typically recommend actually is to go through something like a liquidity bootstrapping pool. So something like Balancer, for example, is really quite useful. And
Mm-hmm.
the reason for this is because what you can do is you can quickly start to figure out, you can actually conduct price without necessarily having to have a lot of liquidity.
Mm-hmm.
So typically speaking, you jump into a liquidity pool and it's 50-50. If you're using something like Balancer, you can go like 90-10. So you can put a very
Mm-hmm.
small amount of USDT cash, which again, everyone's going to be, yeah, we're assuming people are strapped here. So a
Mm-hmm.
small amount of cash plus a good amount of your token. You can enable price discovery through buys and sells, and you can then take that liquidity and repurpose it in a pool like a DEX, for example. And that's your sort of like your foray into getting into the space.
Mm-hmm.
Hopefully you can build up some TVL, and then once you've done that, you can go out, usually get a sex listing quite quickly after that.
Mm-hmm. That's good to know.
Yeah,
And
yeah,
I just want to dive into the platform itself a little bit more because you sound like you have a lot of knowledge in launching the token, and people are always looking for companies that, even if they're great companies, whether it's an established company or a startup, jumping into tokenization when you haven't been in crypto, you're not familiar with the wallets, can be a daunting task. So with
yeah.
Tokenized.Tech, how easy do you guys make that process for companies that aren't that familiar with crypto?
Well, actually, the way we've structured the platform is the only thing you need is a Google login. So
Mm,
you can just jump in with just a normal account and basically start going. What we've done is with the platform, we've broken down everything from sort of like, okay, you might have something like FDV somewhere, and then we'll break it down for you. This is your fully diluted valuation, and fully
mm,
diluted valuation means this. So we've
mm,
tried to make it as simple as possible and as straightforward. What we're actually doing now, though, is we are pulling in everything that we've done in our builder, and we're pulling it into a new system that we've been building out, and it's going to be totally AI. So
mm.
it's going to be like you can just text, you can just talk to it and just say, hey, I want to build that X sort of token, and it will
Huh.
start to build the token out for you. So it'll one, it'll cut down the learning curve for sure, but it'll also just be generally a better experience.
Hmm. Yeah,
Yeah.
AI is really shaping everything in the world, and I feel like it's been the notion of AI plus blockchain has been around now for a year and a half to
Yeah.
since sort of ChatGPT initially launched and had all those users on day one. There was like, hey, but there wasn't a lot of functionality, and I feel like it's now catching up. What do you think about
Yes.
where that intersection of AI and blockchain is together to actually have functions to actually do things rather than just typing to a LLM?
Oh wow, I'm very excited about this question because we've been deeply exploring this for months. I'm sure most companies are. So even since maybe January or December of last year, I've been writing about just like all sorts of different concepts and niche ideas of things that I've just been like I write to sort of help me think through thoughts,
Mm-hmm.
basically. I'm sure most people do the same thing. And so what I've been thinking about a lot of is actually the intersection between the agentic economy and crypto,
Mm-hmm.
because my current thesis and something that we're sort of building the company on right now is that if we eventually shift to a point where agents transact on behalf of humans, then and the only way that an agent can transact is through something like a wallet, so through a blockchain, through a ledger, then eventually all assets will have to be on a ledger, will have to be on a blockchain. So you imagine in a future where maybe 5 years from now, you could use an agent to buy Apple stock that has been tokenized on chain. That's where I sort of see things
Mm-hmm.
going quite quickly. And so what we've been thinking about is essentially everything that is really frustrating and tedious and annoying when it comes to Web3 stuff, and how an AI could essentially abstract it away. So
Mm-hmm.
buying, selling, swapping through large trading interfaces is, you could abstract that. Buying, selling, swapping through simplistic UX, you could abstract that. Bridging assets, you could abstract that. Liquidity pool management, you could abstract that. So all of these certain things that people have to do as founders, you could basically just do through an AI. I
Mm-hmm.
also think that they could be solving problems. So one of the biggest problems up when, especially when working with founders, is market makers are a bit of a problem,
Mhm.
unfortunately. So, you've got Gotbit that went under. You've got all sorts of other market makers that have predatory practices, non-transparent fees. They're sort of like you end up in situations where market makers can potentially be incentivized to sell your token, which
Mhm.
is obviously to your disadvantage.
Mhm.
And so it would be very simple, honestly, to pull together an algorithm and have an AI just do it. So it's
Mhm.
like I want to be finding things that are worth solving, that could be tedious, annoying things that you
Mhm.
could just make more efficient, as well as things that are like actually broken, and have been broken for a while.
Mhm. Do you feel like we're on the cusp of that functionality where in both of those parallels you can just like when can people just start text to trade in terms of AI actually being able to control your wallet or create the token for you?
It's actually already here. I mean, there are
Mm.
that are already doing it. There are there's protocols like Hey Anon, for example, is a good
Mm-hmm.
one who is doing it.
Mm-hmm.
Codex, which is like a platform that lets you create agents with like a simple trading strategy. So you might create an agent that buys ETH every time it goes down 5% and sells ETH
Mm-hmm.
every time it goes up 5%,
Mm-hmm.
and it just runs it in the background for you. So
Mm-hmm.
there are essentially what I would define it as is fringe experimentation of the concept. Nothing's really caught on from product market fit perspective. Nothing's really grown just yet.
Mm-hmm.
And I think it's mostly because, you're giving asset control to potentially an unsafe or not
Mm-hmm.
100% built entity, if that makes
Mm-hmm.
sense. But I
Mm-hmm.
think very quickly, once we've gotten through this experimental phase, and we're actually about to start beginning our own experimental phase, which is very exciting. Once we get through that, you'll start to see it more and often, very, very soon.
Mm-hmm. Yeah, I'm looking forward to seeing more AI functionality. And can you talk about where Tokenize is at right now with what's capable? And we know the AI stuff's in the
Mhm.
future, but can you actually
Yeah.
get started on the basics right now?
Yes. So we have two key tracks basically. So we've got build, which is all of the tokenomics and stuff, and then we have track, which is where you can track assets when it gets to market. So the metaphor we sort of use is we can help people build a really nice airplane, and then we can help them stop flying it into mountains. Because that seems to be that's the Web3 space right now. No one's got like the autopilot or the telemetry,
Mm-hmm.
and it's the plane is often the Hindenburg. So we can help you build something better, help you stop flying it into a mountain. Tracker basically analyzes digital asset markets using like not proprietary, but it uses the data that we have on Access. So
Mm-hmm.
what we've actually done is we've built physical nodes that scrape blockchain data, and we have been essentially training our LLM with that blockchain data. So it's terabytes and terabytes and terabytes of
Mm-hmm.
information that is very specific to digital assets, which is really useful, and helps you to build a very quick understanding as to opportunities in the market where you could be longing and shorting. And we're actually about to start an experiment internally where we're like our money, our personal money, and put it into the market with our insights and
Mm-hmm.
start to basically build a case study uh, around this concept, around being able to trade and successfully, hopefully, out trade the market.
Mm-hmm. That's amazing. And Pump Fun, I don't know if it got really successful, and they did their own token launch and they raised like
Yeah.
billions, and they made it so easy for companies to, or just people to create tokens without
Mhm.
all of these intricacies of the importance of tokenomics, which we talked about in the beginning. Um, what do you see in the importance of streamlining something to make it so easy, but of course add all these important parts like the tokenomics and launching. I know launching and managing is super important, and I think that's probably where
Yeah.
Pump Fun fell short because probably most of the projects. I think I saw the stats. 99% of them, after a few days, were down.
Yeah. 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 And actually, I think it's Fund's credit, and I always like to give credit where credit is due. They've done a good job. Like they've clearly found a product market fit and clearly found a demographic and a use case for their particular thing. But in my mind, I totally disassociate pump funds tokens with digital assets,
Mm-hmm. Yeah.
essentially.
Mm-hmm.
So I would more closely basket up pump fund with something like Facebook. It's
Mm-hmm.
closer to social media that you can just trade these tokens that represent some sort of social hype or
Mm-hmm.
some sort of mimetic culture, if you think
Mm-hmm.
about it like that from that perspective. And it also, I guess, it sort of lends as well into they had a very brief stage where they had like streaming and stuff like that. So again, Pump Fund is basically closer to social media than it is to a platform that launches assets.
Mm-hmm.
And I think that's really where we distinguish ourselves. We're not particularly like I think it's again it has its own use case, but we're not particularly interested in that side of crypto. We're more in like you said, building out really good
Mm-hmm.
fundamentals, strong economics that support actual assets that hopefully in time will become seen as closer to a stock or to
Mm-hmm.
real estate or to a commodity than it is
Mm-hmm.
seen to something like pump fund.
Yeah, that's what I like to hear. And speaking
Yeah.
of stocks, real estate, every single company in the world could have stock. Do you think it's as simple as that, that every company eventually should, in the near future, maybe look at a platform like Tokenize to tokenize at least their stock, if not their other assets or real estate?
Oh, I'd hope so. I'd love to think that. That'd be amazing. I also think it's like so where companies are at right now, I think there's a couple of things that could potentially potentiate. I'm not really sure yet. So the first one is, in my mind, there could be a case where companies stop using traditional share structures and only use
Mm-hmm.
tokens as their form of ownership structure, actually.
Mm-hmm.
And so like that would require, of course, like regulation and Tokenized would have to be heavily compliant, which is sort of what we're engineering our tooling for anyway. And that
Mm-hmm.
could be potentially an interesting shift because a lot of the customers who used us are just over the traditional equity structures. You have to
Mm-hmm.
pay
Mm-hmm.
like a good example of this in Australia, when you set up a company, you have to pay potentially capital gains tax on an asset that might not be worth anything in future. So meaning if you've got, equity structure, right, and you send out equity to shareholders,
Mm-hmm.
you may have to pay capital gains tax depending on how that process has been done. And that's crazy because there's no liquidity event. You haven't made
Yeah.
any money yet, and you probably won't make money for the next 7 years. Why do I have to pay capital gains? So companies are already sick of that. Fair enough. And so
Yeah.
I've actually seen and spoke to founders who've been looking at tokens differently as more of an ownership structure rather than just simply a utility coin. So that's one
Mm-hmm.
interesting thing. The other thing is that you've got companies like Robinhood who basically, I assume what they've done is they've just bought up a ton of private stock and then tokenized that private stock on their platform.
Mm-hmm.
And so, you could were an early investor in Stripe and you've literally just holding stock that is not on a public market, but then you go out and tokenize it and you bring it to a public market.
Mm-hmm.
So I think that's interesting too.
Mm-hmm.
And if we started to see that, if you started to see companies or third parties essentially taking control away from the founders, which would not be very fun, but you could do it technically. So you take control away from the founder. You say, "Look, I've got some stock. I own some of your stock. I'm just going to tokenize it anyway. It's something you can do. I can support the liquidity. I can open the pools up. Whatever. The technology is easy." At that point, you may actually start to see founders feel forced into having to do something like that. I would prefer that they would choose, but it actually just might happen. And I
Mm-hmm.
remember I can't remember his name, but the CEO of Robinhood was speaking to the CEOs, I think it was of Stripe, and they literally said to him, "Please don't tokenize our stock." Because at a certain point, the technology exists, and if you have the stock sitting in your bank account or wherever it's sitting, you could very easily then tokenize it on a blockchain.
Yeah, I have a feeling like there's gonna come a time where it's gonna be there's gonna be so many barriers and it's gonna be so slow. I've talked to other or companies that are also working on tokenization of private markets, and it's gonna look like such a snail's pace on how stocks used to be once they become tokenized, and everything moves around so much faster. And people
Oh,
that start
it would be like,
companies, I don't know if it's even 5 to 10 years from now, people will be like, you have to this is the standard is like tokenized stock.
yeah, it's like it would be insane. I mean, it would be 24/7 markets constantly for everyone for always. Like I don't know if that's a good or bad thing. It might end up, we might end up no one might not get any sleep anymore. But then you can also see where it's interesting. It lends itself back into the AI because I, as a human, I can't monitor everything 24/7, but my AI definitely can.
Definitely. And I want to touch
Yeah.
back on that AI part for Tokenize and also just the roadmap in all of these advancements as the industries are moving, all of the industries are moving towards tokenization. Can you just recap your guys' roadmap for the AI integration
Yeah.
and then just the roadmap for the rest of this year and how you envision growing?
Cool. Okay. A couple of things. So we're going to be coming out with a new product very, very shortly. Actually, towards the end of this month. So that's going to be our tracker. People will be able to do deep analysis on assets and then very quickly figure out whether or not there's a short or a long or a buy or a sell
Mm.
opportunity, essentially. We are also piloting this technology out with large scale treasury managers. So helping them both to prune their treasury and also help them to grow their portfolios. We will then also be piloting this technology internally with our own sort of internal asset fund, management fund, where we'll be looking at liquid assets and opportunities in the markets for us to be using this technology and applying it towards it. And then towards the end of the year, we're sort of estimating Q4, we imagine tokenized version 2 will be out in the world. And that will essentially be a full composition of everything that you might need for the build, the launch, and the management of a digital asset.
Amazing. And what's the best way for
Yeah.
people to, get started on the first step on building and figuring out the details? Do you just get started right on Tokenize, or do you sort of read about the parts? How would new companies or influencers or whoever wants to create a token get started?
You just jump in, you get your feet wet. You jump onto Tokenized.Tech and start to get a feel for it. I mean, I've written so much literature around Tokenomics
Mm-hmm.
101 and all that sort of stuff,
Mm-hmm.
and it all exists in our resource page on the Tokenized
Mm-hmm.
website. So, if you really feel like it, you can always, if you're a bit of a scholar, you can study up.
Mm-hmm.
But I always say it's best to get your feet wet.
Mm-hmm.
It doesn't cost you anything to build a model, basically, and you don't have to launch the thing. So you might as well
Mm-hmm.
just jump in and start having a play.
Yeah, that sounds great, and I agree. With Bitcoin as well, although it does cost you something to get Bitcoin, but there's no better way to learn about Bitcoin than to just get $5 of it and have it on your phone,
Exactly.
because you can read about it forever, but until you actually get some, you won't understand how amazing it is, and how amazing tokenization is going to be, and it is right now. But as it grows out into the financial markets and all of the other markets of the world and the derivatives to quadrillion-dollar market cap, all on the blockchain, it's coming, and I'm
It sounds
excited
amazing.
to be here for it. Yeah, definitely. And
Yeah.
I appreciate your expertise on the tokenomics side and launching a token. It's very important for companies that are planning to tokenize to understand the intricacies of how they can set it up for success. Look, I'm wishing you and the team at Tokenize all the best. I'm looking forward to the AI launch as well. I'm going to check out the site right now, like in today's version, on just getting the build ready. And as you said, it doesn't cost you anything. So I would recommend checking that out. And then would love to follow up with you as the AI version grows out and as more companies realize that tokenization is here to stay and they should get on it.
I mean, I'm hoping that in a couple of months' time, I can show you a big fat portfolio that we've managed to grow using the AI. That's the goal right now. That's the goal.
Definitely. Yeah, I'm looking forward to it, Daniel. Thank you so much for taking the time, and let's
Thank
follow up
you.
again in the near future.
Awesome. Thanks for your time, Ashton. Appreciate it. Thanks for having me.